Hello guys, this is David Capable in the building, and today I'm going to be teaching you a very important forex technical analysis tool, and that tool is none other than chart pattern. You and I understand that chart is actually used to represent how prices move in the forex market. Therefore, the graphical representation of price movement in the forex market are actually represented in charts. There are different kind of charts that are being used in the forex market. We have the bar chart, we have the candle chart, and we have the line chart. Now, this leads us to the chart patterns. Now, there are different charts that comes with different patterns. What is now a chart pattern? Now, we're going to be defining our chart pattern as a shape within the price chart that helps to suggest what price may do next based on what they have done in the past. Forex trading is all about predicting the market movement via the price movement. If the price is going to go up, you know the market is going to be bullish. If the price is going to come down, you know the market is going to be bearish. Therefore, as an expert trader, we tend to utilize this particular movement to our advantage. We take advantage of this movement. When the market is going, this has the tendency to go up, we're going to place a buy order. And if it has a tendency of coming down, that is going bearish, we're going to place a sell order. But there are some things that repeatedly we have seen over time that helps us to understand perfectly when to actually place this particular order. Now, these things can only be seen in the chart. How this chart is being formed, the shape, the model, you understand? How it's being designated, how it's being designed, how this chart forms can actually gives you a pictorial view of how the price is going to move. So when you see this particular chart, we see this particular chart forming this particular shape, form this particular pattern, you could know that actually this is time for me to place a buy, or this is time for me to place a sell order. Now, the chart pattern has different types. So in this video, I'm going to be discussing some very important chart patterns, some very important chart shapes, models, you understand, that frequently appear in our charts that tells us when to buy and when to sell. All right, guys, as we progress, the first chart pattern we have here is called the head and shoulder. The head and shoulder chart pattern shows us there are three peaks. The peak at the middle is higher than the two peaks beside it. The one at the middle that is the highest is called the head, while the two peaks beside it are called the shoulders. Okay, now if you perfectly want to understand this chart pattern, you need to convert your chart into line charts. When you see a shape like this using a line chart in your forex trade market, maybe in your metaphor or in meta5, whichever one you're using, and mind you, you can actually make use of either any of the time frame M1, M5, H1, H4, D1, any of the time frame that is comfortable, that you are comfortable with. You can actually use it to predict this thing. It depends of the kind of trader you are. If you're a swing trader, if you're an intra trader, if you're a day trader, and whatever you are. So the chart patterns is not limited to any time frame. Okay, it's not limited. So, but this is just a guideline to tell you when you see something like this, a head and a shoulder, what does that tell you? It is time for you to place what? A sell order. Now, where do you place the sell order? At the neckline. Look closely at this diagram. You can see where the neckline is being marked with a red line. You see where they wrote entry. That is where you are going to enter your sell order from. You saw clearly where they wrote stop. That is where you put your XL. Your SL simply means your stop loss. Then you see gradually where they wrote target. Your target means where you can take profit. I hope you clearly understood what the head and shoulder is. Okay, this is what the head and shoulder is. Look at it very closely. I used a line chart and also a candle chart beside it to show you how it represents. Okay, this is just a pictorial example of how a chart pattern occur. Okay, now let's go to the next chart pattern. The next chart pattern is called inverse head and shoulder. The inverse head and shoulder is just the opposite of what we just said, what we just learned previously, which is the head and shoulder. It's just the opposite. In this case, we are going to be placing a buy order. I mean to say, we are going to be placing a buy order. You can see this is just a reverse. It's just an opposite of what happened. Look at the neckline. You can see at the base region. You can see where the head is at the middle. The base. You can see the shoulders are the opposite directions. You can see it's just the opposite of the other one. But this time around, our take profit is above. You can see it because we are placing a buy order. You can see the entry means where you are going to enter. Then where you are going to take your profit is where you have a target. You can see where your stop loss is. So the inverse head and shoulder is an opposite of what? The head and shoulder chart pattern. I hope this is clearly understood. Take a closer look at this. This occur in any of your time frame. It tells you it is time to place a buy order. Depends on whatever time frame that you are comfortable at trading with and the kind of trader you are. Like I said, day trader, intra trader, swing trader, and whatever you are. Okay, now the next one on our radar here is the double top. This is how a double top is. I want you to be looking at it pictorially. If you see this kind of chart shape on your time frame, it tells you it is time to place what? A sell order. Okay, now these are two tops. There is a neckline in between. You can see the neckline they drew a red line there. That is the entry zone where you can place your order. You are placing your sell order on that entry side and taking your profit at the target. You place your stop loss where you saw stop. I think this is very clearly understood. You know, people tend to understand this thing better when they see it in picture. So that is why I have to explain this using a picture, not just saying it with my mouth. If you see a chart shape like this, you understand pictorially, you understand clearly that this is actually a time for you to place what? A sell order. Let's move to the next one. The next one is a double bottom. Now, the double bottom is just an opposite of what? Of the double top. You can see this is how a double bottom is. All right, where you have two bases. You can see two bases. Now you have a neckline there, where the neckline is where you have the entry zone, where you can enter a buy order and take your profit where there is what? Target. Your target means your TP. Okay, now below the entry point you can see where the row stop. That is what? A stop loss, where your stop loss is. Now you can also see how this is represented in what? In candlestick, because I have to make use of candlestick and also a line chart. Okay, you can use candlestick chart or line chart like I told you. Understand? Now when you see something like this, it tell you get ready for a buy. Look at it closely again, guys. I know you're enjoying this thing, right? It's sinking into your head. Now let's progress. The next one is called the rising range. I know you must have seen how the chart represents the price movement in forex. How you can see something like this before. While you're studying, you can discover something like this. Now, what do you do in this kind of situation? If you see a rising wedge, okay, this is a rising wedge. This is how it's been explained. This is a rising wave in a line chart, represented in line chart. What does that tell you? When you see a rising wedge like this, as if there is a consolidation at the top, that consolidation tells you the market is going to come down. So you have what? A stop loss. at the head there where you have stop. Then we have the entry. You can see the entry there where you can enter from there, place your sell order and take your profit at the target. This is a raising wedge. You can see it here and it's represented in line chart. I hope this is clearly understood. Let's move to the next one. The next one is falling wedge, just the opposite of the raising wedge. This one is coming downward. As it's coming downward, as it's coming down, what happens? It means there's a tendency that the market is going to go up from there, and it's being represented in using a line chart. Look at a line chart now. There's a consolidation at the base, unlike the previous one when we have a consolidation at the top. Now here we have the consolidation at the base, where you have the entry point here, and we now saw the target. You can see the target at the top here, right? The target means where you can take your profit, TP. Then your entry point is where you are going to enter the market. You are going to place your buy order there. Your stop is your XL. I hope this is perfectly understood, guys. Perfect. Look at it closely again, and let's move to the next one. The next one is called the pendant or the flag. Now, I don't need to say much about this, but take a look at this. Look at how it is. You can see your entry zone too. You can see your stop, and you can see your target. Some of them tells you also how it's consolidated and is going up. Just look at it. It's just self-explanatory. Okay, if you see something like this on your chart, what does that tell you? It is time for you to place a buy order. Okay, you place a buy order. Okay, then the next one, we have also the same pendant and flag, but bearish this time around. You can see when you see something like this, what does it tell you? It tells you that the market is going to go down. It's going to go bearish. So when you see a pendant or a flag, a pendant or flag that is bearish like this, it means the market is about to pull down. Okay, so guys, this is self-explanatory. That's why you need to look at the picture closely again and again, and you get to understand it. Now I repeat, this chart patterns, they work with any time frame, depends on what kind of trader that you are, and it's best understood if you can convert it into line chart. It helps you far better to understand how you can actually predict this. Then we go to the next one. We have the symmetrical triangle. The symmetrical triangle is just like this. I've used a candlestick to represent it here, but I'm going to use a line chart to represent the symmetric triangle. Now, using a line chart, this is how a symmetric triangle is. This symmetric triangle is just that, is telling you that the market can break out from any point. Okay, the market can break out going up, or it can break out coming down. So this is a very dicey situation. Yes, sir. It's a very dicey situation. In this case, I always advise traders they should pause, because why? You don't know if the breakout is going to be going to be up, which is going to be bullish, or the breakout is going to be bearish. So that is why you saw two entry points here. You can see one entry point shows is a blue line showing that you are going to take your profit up, while the other entry point is a green line, meaning you're going to take your profit down, meaning it's going to be bearish. So in this case of symmetric triangle, you need to be very careful, because you don't know where the market is going to break out from. Okay, so while you're trading your chart pattern, guys, it's very imperative that you know that you can use any time frame. Chart patterns are very, very, very important while trading forex. So guys, I hope this topic has been very helpful and has immensely blessed you. So if you have enjoyed this topic I taught right now, please do not hesitate from clicking the like button, share with your friend, and subscribe to this channel. I remain your boy, David Capable. Thank you guys, and stay blessed.